Let's start tonight in West Africa, however, where uncertainty does continue to plague Nigeria's budget process after President Goodluck Jonathan failed to present the 2014 spending proposals before the National Assembly earlier this week. Now, it turns out that wrangling over the price of oil contributed to its non-delivery. The Senate rejected the government's oil benchmark of $74 a barrel. It raised that to $76.50. The House of Representatives, however, had set its benchmark even higher at $79 a barrel. In a letter to the House of Representatives, President Jonathan said the budget would only be read once a unanimous decision, a unanimous position, as it were, had been arrived at. Twice in the month, the president had written to the Assembly asking lawmakers to give him time at noon on November the 12th and the 19th, respectively, to deliver the annual budget, but he failed to show up on both dates.
It has become necessary to defer the presentation of the 2014 budget to a joint session of the National Assembly until such a time when both respective chambers would have harmonized their positions on the MTEF.
When you say you peg benchmark at $75, it is not the whole $75 that goes into the federal government account or the federation account. It is not so. This issue of transportation, this issue of drilling, all logistics are being taken.
Key concerns all around in Nigeria. Elsewhere, further south, Trust Bank has become the second commercial bank in Zimbabwe to struggle to pay its depositors this week as the country's banks struggle with a deep liquidity crisis. Local media reports indicate that the bank's clients in the city of Bulawayo, most of them teachers and civil servants, spent the earlier part of the week in long queues but only ended up going home empty-handed. Now, this situation could sour end-year festivities, which have been made even worse by the inability of civil servants to get access to their annual November bonuses. Now, Metbank's Bulawayo branch also imposed withdrawal limits of $200 in an attempt to make the most of the little cash that it does have in hand. Cash shortages and long winding queues in banks were last seen around 2008 when the local currency, the Zimbabwean dollar, was still in use. Live from Harare now, we're now joined by CCTV's Farai Mwakutuya with the latest details from that country. Farai, in 2012, two banks were shut down. What's the latest on Trust Bank today?
Well, in terms of Trust Bank, as you've rightly said, they've struggled over the last few days to pay out cash to some of their depositors. Yesterday, as a counter, they were suspended from trading on the Zimbabwe Stock Exchange, and that suspension is likely to have a knock-on effect. It will leave some depositors wary. They're likely to want to grab what little money or what money they may have in the bank before things do get worse, and that could compound the liquidity crisis. So at this stage, it's not looking very good for them.
Indeed. We also do know that Zimbabwe's central bank is in a relatively weak position. Its balance sheet has been mauled over the years. It can't effectively play the role of a lender of last resort. But will it put Trust Bank into curatorship in the same manner in which it treated Interfin?
Well, if it does come to that, it's most likely that the central bank will do that, if anything, to protect depositors and in a way ensure that they can recover something, recover part of their deposits. Also to try and maintain a semblance of confidence in the banking sector. Curatorship effectively leaves a window of opportunity that the bank can bounce back. And as you quite rightly said, the central bank doesn't have the capacity at this point to play its role, and that's central to some of the challenges that this financial sector is facing. The central bank doesn't have the money to rescue these banks, and so that's why we've been seeing some of these failures and seeing this liquidity crisis. Rama.
Indeed. Away, of course, from the banking issues, let's talk about one central pillar of ZANU-PF's policy, the indigenization drive. Now, we have seen some sort of moderation in talks with Western governments over the last couple of weeks. Do ZANU-PF supporters, however, feel perhaps this is a sort of betrayal of the ideals that they voted for in July?
Well, I think betrayal might be too strong a term, because certainly ZANU-PF will not back down from the indigenization program. It will certainly go ahead, perhaps not with the same gusto as before, but it will certainly go ahead. And at this point, nothing has really been confirmed or finalized. There have been indications that there will be moderation or flexibility, but we're not sure what that actually entails or what that actually means. And I think there's also a realization that there are certain statements that are made on the campaign trail ahead of an election to get votes, and also economic fundamentals and policies that need to be in place to get an economy ticking again. And what we're seeing now is those fundamentals and those policies carrying the day.
Indeed,
Rama.
we'll have to leave it there for the time being. Thank you very much for the feedback. That's CCTV's Farai Makutuya from the Zimbabwean capital of Harare. Now, we're still keeping a very close eye, really, on that Southern African country. It's working to improve economic ties with France, as scores of French companies are looking for investment opportunities in Zimbabwe. France's ambassador to that country has been quoted in the local Herald newspaper saying that France is focusing on future opportunities while describing the contested elections earlier this year in July as a closed chapter. Zimbabwe was recently named as among the most indebted poor countries likely to benefit from debt cancellations by France next year. Zimbabwe has over $10 billion worth of foreign debt, but it's not clear how much of that is owed to France. What we do know, however, is that about $4 billion of that is in arrears. Other countries on the France debt cancellation list include Somalia, Chad, Cote d'Ivoire, and Sudan as well. Let's get some more details on that rapprochement between Western economies and Zimbabwe. CCTV's Miriam Bema joins us now live from London. Miriam, over the last decade or so, relations between the West really and Zimbabwe have been more or less in the cold. Why are we seeing this rapprochement now, especially between France and Zimbabwe?
Well, Rama, despite the political issues between the EU and Zimbabwe, investors are keen to get into Zimbabwe's mineral resources, for example, and agricultural productivity. And these are certainly areas already seeing investment from China, prompting European companies to follow suit. It's quite an attractive destination, if you will, but this will be a long and slow process. You know, we're making headway. Just recently, shareholders in Zimbabwe's largest seed manufacturer, for example, Seed Company Limited, approved a $60 million deal with French company Vilmarine & Cie. The vegetable seed developer will acquire about 25% equity stake in the local company by the end of 2014. And, you know, some experts say that it'll likely be actually the biggest deal on the Zimbabwe Stock Exchange in a long time. And certainly other investors are watching to see how this one will fare out and to see if there's more opportunities to step in.
Indeed, but let's focus again, unfortunately, on the politics of this. We have seen some mixed messages coming out from France. A minister there saying that Zimbabwe may be eligible for debt relief in 2014, but then later on we're seeing French officials coming out and saying, well, no, actually Zimbabwe may not necessarily benefit. Won't this essentially just strain these newfound ties between the two countries?
Absolutely. I mean, what we need to see is some sort of official statement from both on some sort of dialogue, if you will. Perhaps something that we could see in next year. Certainly both sides are trying to reduce the strain, and there's been contradicting reports, as you said, on France intending to cancel $3 billion worth of Zimbabwe's debt. At the same time, Zimbabwe's finance minister, Patrick Chinamasa, has said that the country is striving to honor its debt obligations to basically try and revive investor confidence and hopefully attract new funding. Now, experts we spoke with say that this political divide will likely be ironed out next year, as both sides are very optimistic for stronger economic ties. But France's ambassador to Zimbabwe has also made it clear that, you know, Zimbabwe isn't eligible for the program, the Most Indebted Poor Countries Initiative, as long as it hasn't settled its debt with international financiers. And some economists estimate that, of course, Zimbabwe owes about $10 billion, as you were saying, overall to the IMF, the World Bank, and the Paris Club. And hopefully by next year, if we see that open dialogue between both sides, we can come to some sort of agreement.
Indeed. Finally, Miriam, the fact of the matter is that we have seen several European countries questioning the sanctions that have been placed on Zimbabwe this year. Are we likely to see a general easing through to 2014?
That is the hope. I mean, that questioning has been in place for quite some time, and certainly we're already seeing this shift taking place. Just 2 months ago, Belgium was the first to break away from the EU's position on imposed sanctions on Zimbabwe, and it actually led to the EU lifting restrictions against the Zimbabwe Mining Development Corporation, which controls Morange, one of the world's largest diamond fields. Now, experts say that this alone has actually very much opened the gateway to diamond reserves that supply about 30% of the international market. On the flip side, of course, the joint venture mines in the Morange diamond fields generated $690 million in exports, and analysts analysts say that even in agriculture, for example, deals like the one that we're seeing between Seed Company Limited and French company Vilmarine and Sea are really helping the country tackle its debt reduction, which is, of course, what the government is trying to do, with $20 million going towards paying off the debt.
Indeed, we do live in interesting times. Thank you very much for that. That's CCTV's Maren Bemad live from London with the latest, of course, on the newly found warm ties, if you will, between the West and Zimbabwe. Now, let's move on to matters concerning the IMF and Malawi. The fund says that country is in a deep fiscal crisis following corruption allegations that have seen development partners freeze the flow of aid altogether to Malawi. Now, at the conclusion of a country visit, the head of the IMF mission there, CDC Kata, said the allegations had not only caused uncertainty about Malawi's management of public finances, but had also angered quite a few Malawians. The mission recommended that the President, Joyce Bandi's government, reverts to domestic borrowing to plug its budget deficit and at the same time hedging against a possible resurgence against inflation while preserving international reserve levels. The IMF has also recommended some public spending cuts to the farthest extent possible. The commission was in the country to determine if Malawi could access an extra $20 million under the IMF's extended credit facility. Now, Ghana's Deputy Trade Minister Edwin Nielante has asked the Chinese government to give greater preferential access to Ghana's goods and services to the Chinese market. Now, the Trade Minister essentially argues that this isn't just about Ghana. ECOWAS members also stand to gain.
Our exporters will have access to the Chinese market if the tariffs and the barriers are relaxed a little, because the competition is keen. And without some sort of consideration for barriers and tariffs, it will be difficult for our people to make the impact. But we are very positive that the point we made, if it's accepted by the Chinese authorities, it will offer our exporters the platform in order to export to the Chinese market and be able to also take their fair share of that big market.
Over in Mogadishu, waste disposal and management has been a problem in that seaside city for years, but authorities there are getting quite a bit of help from their counterparts in Istanbul. The hope is that they will produce some much-needed results this time round. The CCTV's Mohammed Hirmoge now reports.
After years of conflict, Mogadishu has been restoring city services now that relative stability has returned. But for the city of 2 million people, garbage collection remains a challenge. Heaps of garbage can be seen on roadsides, posing a health risk. Mogadishu's mayor has recently signed an agreement with the municipality of Istanbul to support garbage disposal and beautification.
We are opening up the roads that were cut off before, and we are also clearing the garbage mountains, and God willing, we shall have the entire city clean.
The Turkish Red Crescent placed litter bins on the roadsides. Trucks can then collect them for safe disposal outside the city.
What we are doing is restoring the beauty of the capital. We clean roads, few potholes, and we're working on drainage system of the city. The city is now improving its look.
Garbage collection is now a daily exercise. Trucks take trash to 2 dump sites outside the city. This city doesn't have the potential to recycle litter and make good use of waste, but in the meantime, garbage collection service will help the municipality's goal of beautifying the city. Residents feel this garbage disposal project could transform the look of the hitherto ghost city.
I'm really happy that there's finally an organized system of garbage disposal. This city's look is changing.
This is such a prudent initiative. This city is not the same anymore. I think the glory days are back.
Part of upgrading the city is the construction of the 23-kilometer road that links the presidential palace to the airport. Mohammed Hirmoge, CCTV, Mogadishu.
Time for a short break here on Africa Live. Here's what's coming up next. Uganda is gunning to become Africa's top coffee exporter. We'll be looking at plans to tap into rising demand from China when we come back.
Talking tough on trade. Conflicts over currency. and connecting economies around the world. From Tokyo to Shanghai and Mumbai, BizAsia links you live to the markets and brings you all the latest in business from China's unique perspective. BizAsia, a smart investment for your time.
Welcome back. Now, South Africa's opposition to Urban Tolling Alliance has expressed its disappointment with the decision by South Africa's government to proceed with e-tolling despite broad opposition from several quarters. Now, on Wednesday, the country's transport minister announced that the e-tolls would take effect from the 3rd of December. That said, there has been, of course, quite a bit of broad-based rejection ever since the idea was first mooted by the government, from trade unions to, of course, groups like OTA.
We would have hoped by now that government would have seen the irrationality of this process, the lack of buy-in of society, the enrichment of overseas companies, the unworkability, all those inefficiencies. Those matters have obviously been ignored, and they are just forging ahead with an unjust policy. Which will not attract the support of society. And matters of this nature need to have the buy-in of the people. If it doesn't, they fail. They fail. Just a matter of time.
Quite a bit of aggressive reactions there in South Africa. Let's get the latest on the policy moves. CCTV's Sumitra Naidoo joins us now live from Johannesburg, South Africa. Sumitra, President Zuma's already signed the bill bringing the e-tolls into law. They're coming into force on the 3rd of December. At this point in time, really, is there anything that can be done to stop their implementation?
Well, Rama, so the e-tolls will kick in on the 3rd of December, and those that use the road will be liable to pay. And those that don't have an e-tag, in other words, they haven't registered, these motorists will be penalized. They will have to pay double the toll rate. But I think, Rama, this fight is going to continue. So by law, motorists would have to pay, but it's not law for them to get an e-tag. And this is where the protest will continue in the form of a civil disobedience campaign. So those groups that are fighting this case are now calling on motorists to abstain from registering for that e-tag. And from the public response that we're seeing ever since the announcement, it's been mostly anger and outrage. If millions of motorists heed this call, it will become an administrative nightmare for the state, tracking people down, sending out legal notices. It will become unsustainable for SANRAL to continue with the e-tolls, and this is really what protesters want. Rama?
Indeed. Let's focus on one argument made by COSATU. They have essentially argued that e-tolls will have a disproportionately heavy impact on the poor, but SANRAL has argued that, well, public transport vehicles are exempt. So how did COSATU arrive at that original argument?
Well, the thing is, public transport in South Africa still has a long way to go. There isn't enough infrastructure as yet that is being provided. But we don't have that proper infrastructure that's providing a strong and reliable public transport system at the moment, which is why we have so much of congestion on the roads. And as a result, you find that many low and middle income earners would buy cars before houses because it's imperative for them to get to work every day. So we still have so many people that are using the roads in their own vehicles or are carpooling, for instance, to get to work. And only those that can prove that they are providing a public transport system will be exempt from paying for the tolls. However, the majority of people in South Africa are forced to use their own vehicles.
Indeed. Let's move on to monetary policy. Inflation data coming out today, 5.5% year-on-year rise in October, much lower than expected. What sort of reactions have you been getting?
There was a bit of a surprise reaction to the lower than expected numbers, considering that we're still seeing rand volatility and weakness. What was really surprising was that there was a slight drop in food inflation, but many analysts are not convinced by the numbers. If you walk into a shop, prices are generally higher, but there was also oil prices, though, that helped bring transport prices down. And of course, the fact that inflation came down and moving away from that target band of 3 to 6%, that upper end of the target band, you know, a lot of economists were saying, or well, at least a handful of economists were saying, look, there's room for more interest rate cuts here. Why don't we? Because the economy is still weak and we still need consumers to get out and get this economy going again. We really need people to be spending, and we're seeing household expenditure coming down as well, but you're not seeing enough people spending. So this is what was really coming through from economists, is that there is now room to cut interest rates. Why not?
Indeed. We'll have to leave it there for the time being. Thank you very much for the update. That's CCTV Sumitra Naidu live in Johannesburg, South Africa, on the day when the central bank, the South African Reserve Bank, decided to hold its base lending rate at about 5 or so percentage points, citing quite a few risks, all related to the Fed's decision to taper, rather uncertainty around that. On to Uganda now. It will plant hundreds of millions of coffee trees from 2014 in order to tap into rising demand for that lovely brew from China. Africa's second largest coffee producer says this is just part of its overall game plan to become Africa's biggest coffee producer, as CCTV's Isabel Nakiria now explains.
In 3 years, Uganda expects to have planted more than 300 million coffee trees, and demand from China is a major driving force.
So we are having a joint venture in China. We have a promotional center. We have already created linkages with coffee outlets in China. So the potential is big, and we are positively tapping into that potential.
Uganda's acreage under coffee is 280,000. Coffee authorities say the East African nation will almost double the figure to 500,000 acres.
The current acreage under coffee is still yielding slightly lower than the average yields that are realized in an acre in other coffee producing countries. So we want to step up productivity and production.
As part of the long-term strategy, authorities are now introducing the crop to non-traditional coffee growing areas like northern Uganda as it recovers from the effects of a 2-decade armed conflict. Still ranking second in the continent as a coffee producer, last year Uganda registered a 30% increase in output. It predicts it can grow its coffee production 40% next year too. Uganda expects to market up to 20% of its coffee to China, and to ensure it hits this target, coffee processors have been urged to maintain quality beans. Isabel Nakiria, CCTV, Kampala.
Right then, quick run through the numbers now for you. Some fairly interesting dynamics of the equity markets today. Let's start in Nigeria. Despite the issues around the budget for 2014, the market ended the day higher, up by 0.78 percentage points. The all-share index in South Africa, as I mentioned earlier, the Monetary Policy Committee holding rates of 5%, citing uncertainty risks, of course, related to the rand hitting, of course, uncertainty risks, of course, related to the taper directly affecting the rand. That, of course, down by 1.25%. The 20-share index in the Kenyan capital, Nairobi, some interesting maneuvers being seen on some of the key counters. Safaricom hitting a more or less high, really, at well over 10 shillings a share, and insurance companies also seeing some fairly interesting action. Sanlam increasing its stake in Pan-African Insurance, and Egypt's market, the EGX 30, ending the day lower by 0.6 after the gains we've seen for most of the week.